These two investments helped us grow our stock portfolio to millions of dollars, and it also helped us purchase this home in the Bay Area, this in the Bay Area, this in the Bay Area, this in Portugal, this in Portugal, this tiny home investment property in Portugal, this as our primary home in Portugal, and now this in Portugal, which is almost a 4-acre lakeside property that we just bought last month. Hey guys, it's Christina, and in this video, I am going to break down index fund investing, and then I'm also going to share the specific index funds that we invested in to become millionaires and to retire before the age of 40. So first, I need to share that Aman and I were government employees. We sat quietly in our cubicles while on the side, we were investing consistently every single month in these specific index funds. And this is really important because it illustrates that you don't need to have a huge 9-to-5 income in order to become a millionaire. You just need to invest wisely. So no day trading, no options trading, just simple investing. So let's start off with the basics. What is an index fund? So an index fund is a type of mutual fund that's designed to track a specific index, like the S&P 500 or the total stock market. So unlike actively managed mutual funds that try to beat the market, index funds simply try to match the market. And that is the difference here. Matching the market instead of trying to beat the market. That is one of the reasons why we love index funds so much. Lower fees, more consistency, and fewer surprises. So the first index fund was created in 1975 by Jack Bogle, who is the founder of Vanguard. And the idea of the index fund was revolutionary. Before the index fund, there were actively managed mutual funds. Now, these actively managed mutual funds charged high fees and they still underperformed. So Jack Bogle had this novel idea. Instead of trying to outperform the market, why not just try to track it? And that one idea changed investing forever. It made investing more affordable, accessible, and reliable for everyday people just like us. It's really one of the reasons why we were able to build wealth while working in our normal 9-to-5 government jobs. We weren't chasing hot stock picks. We weren't following flashy fund managers. Our investment approach has always been long-term, consistent, and based on index fund investing. And this is really important because when you invest in index funds, you are investing in the long-term growth of the stock market, not in someone's ability to beat the market and pick specific stocks year after year consistently. Now let's talk about the two main types of index funds that we invested in. First, we invested in a total stock market index fund, and then we also invested in an S&P 500 index fund. So at work with our 401ks, we were able to invest in an S&P 500 index fund, so we invested heavily in that. Now, outside of our 401k in our other investment accounts, we chose more broader diversification and we invested in a total stock market index fund. So for those of you that aren't familiar, the S&P 500 tracks the top 500 companies in the US, and a total stock market index fund tracks the total stock market. So you're going to have large, mid, and small cap companies, thousands of them. Now let's get to what I think you really want to know, our index fund picks from Vanguard, Schwab, and Fidelity, and we'll start with our total stock market index fund picks. So first we have Vanguard's VTSAX. So VTSAX, along with Vanguard's S&P 500 index fund, which I'll get to later, these two make up the majority of our stock investments. So again, VTSAX is Vanguard's total stock market index fund. The minimum amount you need to invest in VTSAX is $3,000. Its expense ratio is 0.04%. It holds more than 3,500 companies. Year to date, its return has been 1.15%. Over the past 5 years, its average annual return has been 15.23%. Over the past 10 years, its average annual return has been 12.15%. Schwab also has a total stock market index fund, which is SWTSX. There's no minimum amount you need to invest to get started with SWTSX, so you can get started with as little as $1. Now, its expense ratio is 0.03%. It holds a little over 3,000 companies. Year to date, its return has been 0.52%. Over the past 5 years, its average annual return has been 15.22%, and over the past 10 years, its average annual return has been 12.10%. Finally, we have Fidelity's Total Stock Market Index Fund, which is FZROX. Now, just like Schwab, there is no minimum amount you need to invest to get started with FZROX, but unlike Schwab and Vanguard's Total Stock Market Index Fund, FZROX has an expense ratio of 0%. It holds a little over 2,600 companies. Year to date, its return has been 1.23%. And because FZROX was created in 2018, it doesn't have a 10-year performance history, but its 5-year average annual return is 15.44%. So let's move on to the S&P 500 index funds, and we'll start with Vanguard's VFIAX. Now again, this index fund tracks the S&P 500, which holds the top 500 publicly traded companies in the United States. For us, like I mentioned, VFIAX and VTSAX make up the majority of our stock investments. So the minimum amount you need to invest in VFIAX is $3,000. Its expense ratio is 0.04%. Year to date, its return has been 1.54%. Over the past 5 years, its average annual return has been 15.9%. And over the past 10 years, its average annual return has been 12.82%. Next is Schwab's S&P 500 Index Fund, which is SWPPX. There is no minimum investment amount to begin investing in SWPPX. Its expense ratio is 0.02%. Year to date, its return has been 1.05%. Over the past 5 years, its average annual return has been 15.91%. Over the past 10 years, its average annual return has been 12.82%. Finally, we have Fidelity's S&P 500 Index Fund, which is FXAIX. There is no minimum investment amount to begin investing in FXAIX. Its expense ratio is 0.015%. Year to date, its return has been 1.56%. Over the past 5 years, its average annual return has been 15.93%. And over the past 10 years, its average annual return has been 12.85%. Now, with that said, you may be investing with a different brokerage firm, and you can look at their index funds as well by looking at their S&P 500 index fund, their total stock market index fund, or any other fund. You can actually compare them to similar funds with other brokerages, and many of them are going to track the same index. But certain things you really want to pay attention to are the expense ratios, minimum investment requirements, performance, and of course, your overall comfort with each brokerage. And I mention this because I think a lot of times this gets overlooked. Not all index funds are created equally, even if they are based on the same index. And this is because the fees of an index fund or the structure of an index fund, this is largely dependent on each individual brokerage firm. And I'll give you an example. Let's say that there is an S&P 500 index fund that charges a 2% expense ratio, but then there is another S&P 500 index fund that has a 0.02% expense ratio. In this example, you would be getting the same type of exposure to those S&P 500 companies with either index fund, but with the 2% expense ratio, it's almost like you are just throwing money away. And over time, that really adds up. It could be tens of thousands of dollars or even hundreds of thousands of dollars. Now, with that said, we still invest in index funds to this day. We use index funds to grow and manage our investments and our money in retirement. So if you are new to investing, I would encourage you to focus on understanding what you're investing in. Research index funds and learn the difference between funds, compare brokerages, understand the fees, and of course, make sure that your investments align with your risk tolerance. Now, if you want to learn more about investing in the stock market, we have a stock market investing course. The course is over 4 hours and it helps you develop your own investment plan. It helps you pick out your own specific investments, and it helps you become more confident with investing in the stock market. Now, if you want to learn more, you can just go to ourrichjourney.com, and we'll also leave a link in the description below. So my final note to you is Don't worry about trying to pick the perfect time to start investing. The idea is to build a habit of investing. Because when you zoom out and you look at decades of data, you see that the stock market always trends up. And that is what we understood when we first began investing with only a couple of $100 each month, and we still continue to understand that important piece of information to this day. So if you are on your FIRE journey and you're looking for a simple, powerful way to build wealth, look into index funds. And of course, if you like this video, make sure you give us a thumbs up, subscribe to our channel, and join the journey.